In this series, we're going to be talking about investing in money market funds. What are they? What are the costs that are associated with money market funds? How can you open a money market fund account here in Kenya? Are they risky? Can you lose your money? Like, what's the level of risk? Can you withdraw your money anytime? Do MMFs give loans? We're going to be tackling all that in this series. What is a money market fund account? It's an investment that allows different people to contribute money to one account, just like a chama. And then that money is going to be used by an institution, the one that you've saved your money in, to do other investments. When those other investments make money, they share with you those profits in form of interest. For example, let's assume Ivy here, you and a lady called Delta and James, we all save our money in one account. That money is going to be used by a professional, by an expert in that institution to decide which investments should they make. So we don't have a say on what investments are going to be made. Those guys are the professionals. They're the ones who are going to decide where that money is going to be invested. And we really don't care. All we care about is interest going to be deposited to our accounts. How a money market fund works is the interest that you're going to be earning is going to be compounding daily. By compounding, I mean the interest earns you more interest. The interest that you earned yesterday is going to be added to the amount of money that is in your account today to calculate the interest that you're going to be earning today. For example, if you have invested 1,000 shillings yesterday, you deposited 1,000 shillings yesterday. So the 1,000 shillings that you deposited yesterday plus the interest that you earned yesterday is going to be used to calculate interest for today. So basically, interest is earned daily. For example, if you come across a money market fund account that's telling you, hey, the interest rate of the daily yield is 12%. So 12% divided by 365 days in a year, you're going to get the daily interest rate. So the money that's going to be in your account that day is going to be calculated based on that interest rate for that one day. That's a nice thing because your interest is actually earning you more interest. The more the money that you deposit, regardless of the day that you deposit it, is going to make a difference. If you deposit 1,000 bob today, then 5 days later you deposit 500 bob, it's going to make a difference because that 500 bob has actually added to the 1,000 that you had, to the interest that you made the previous days. Who operates money market funds here in Kenya? Money market funds are mainly operated by banks, not all of them. Like not all banks have money market fund accounts because money market funds are products just like insurance and savings accounts, loans. So this is just a product. So banks are going to have money market funds. Insurance companies, some insurance companies also have that product, the one for money market fund. Then we also have like wealth management firms also have the money market fund product. For example, banks like NCBA, banks like Stanchart has Shilingi, banks like we have NCBA, even Corp has a money market fund, Stanbic has a money market fund, but not all of them have. Insurance companies like CIC, I see Lion, Sanlam. Yes, they have insurance, but they also have this product. For wealth management firms, we have Nambo Capital, we have N Wealth, we have Etika. These are asset management firms. They're not banks. They are not insurance companies. They just manage assets. So here's a list of money market funds here in Kenya. You can see we have banks like NCBA. We have insurance companies like Britam. We have asset management firms like Kuza. We have banks like Corp. We have Nabo Capital, which is a wealth management firm. You can see all of them there. Yeah. You can see KCB. You can see Zimele. You can see Lofty Copan. You can see Jubilee. And Emily is an insurance firm. We have Madison. So some of them which are very known for insurance, they also have these products. And also for banks, they also have these products. You can even see the interest rate, the annual rate of return. You can see the initial investment amount. So with the annual rate, the rate of return is the rate at which your investment is going to bring you an interest. You can also see the initial investment. What are the charges that are associated with money market funds? The first charge is the withholding tax. Withholding tax is a tax that is imposed on the interest that you're going to earn all the interest that you're going to earn it must be taxed and paid to the Kenya Revenue Authority. Assuming that you made 1,000 bob in January, or this October you made 1,000 bob, 15% of the interest, assuming the interest is 1,000 bob, not the original amount, you deposited probably 100,000 Kenyan shillings. But the withholding tax is going to be imposed on the 100 shillings interest, and it's imposed per month. So if you made 1,000 bob as interest, 15% of that goes to KRA, so you're now remaining with 85 shillings, 850 shillings. So 150 shillings goes to KRA, and then 850 shillings is now yours. 850 is the one that you're going to see on the statement. The beauty of these statements is that they usually show you the breakdown. They'll show you, yes, you earned this 1,000, then 15% was withholding tax, so that's a negative, and then 85% is the money that you're going to have. The other charge is withdrawal fees. Now, there are MMFs. Actually, most MMFs don't charge you to withdraw money to your bank account. Because to them it's like a bank account to a bank account transfer. Remember, the money is in their bank account, so for them transferring money from their bank account to your bank account is going to be zero for some of them, for most of them, for the ones that I've seen. But the charge is going to come in when you're trying to withdraw money from your bank account to your M-Pesa, number. So assuming I want to withdraw 10,000 bob, I've been saving up and then I now have an emergency, I want to withdraw money. When I'm withdrawing, I'm going to choose the option to withdraw to my bank account or to my M-Pesa. If it's to my bank account, you'll notice when you look at your statement, there are no charges there. But when you are going to withdraw to your mobile number, you're going to notice that there's some charges there. So that's basically it. But there's some which charge you a monthly charge. If there's any MMF that is charging you a monthly charge, I wouldn't advise you to be there, because you're earning little interest. Why should they charge you 50 shillings for them to maintain your account, yet they're going to have the maintenance fee? Like, no, you're supposed to be earning interest. So the first cost is the withdrawal charge. The other one is the tax charge. The other charge is the management fee. It's very tiny. For example, in the list of MMFs that I had shown you earlier, you'll notice like for most of them, it's like 2%, 1%. And then the 1% and the 2% is on the interest, is not on the amount of money that you've invested. Remember when I told you, like, probably you've invested 100,000 bob and then you've made 1,000 bob as interest, so that it's going to be 1% of that 1,000 bob. Even it's not going to be 1%, it's going to be that 1%, because it's per annum per year. So that 1% divided by 12 months, the small percentage that you get times the interest that you get, it's minimal, it's negligible. How do you open a money market fund account here in Kenya? There are two ways you can open a money market fund. The first one is that you can open via the website, or you can download an app. Mali has an app through Safaricom. Then we have Etika, also has an application. SC Shilingi by Stanchart Bank also has an app. The others don't have an app, or the apps are not functional. They mainly operate through the website, like ICE Lion, Britam, Old Mutual. You can literally open an account if you have a smartphone. So what you have to do is that you just have to go to Google, type in www, for example, if it's Britam Money Market Fund account. When you go to their website, there's going to be like an icon that tells you login. So sign up. So you're going to sign up for the first time, and then you're going to register, where you have to attach your ID, you have to attach what else? Your KRA PIN, and then you just have to, fill in other details like who are your beneficiaries. Is it your mom or dad? Is it your brother? Then the other details that you need, of course, it's your ID. The other questions are very simple. So you can open an account online. Just Google the MMF, the specific MMF. The ones that can be opened online, like I said, we have Mali, we have SC Shilingi, we have ICA Lion, we have Old Mutual, there is Zimele, there is Etika. Those ones can be opened online, SC Shilingi. Then the ones that cannot be opened online, you just have to visit their offices. For example, CIC Insurance or CIC MMF, you have to visit their offices, and then they give you a paper to sign up to like physically open an account. It's all physical, like a paper. So two ways, using an app or their website, and then for the other MMFs, you just have to visit their offices and then open an account from there. One thing that you're going to notice when you're opening your account is that there's that minimum investment, like the minimum initial investment. There are those restrictions. From the list that I showed you, you can see that for you to open a Britain Money Market Fund, the initial investment has to be 1,000 bob. I think it used to be 500, but it's 1,000 bob. If you want to open ICA Lion, it's 500 bob. Like, that's the initial amount, and this is the initial investment. This is not a cost or maintenance fee. This is just like the first amount that you're going to be deposit. The first amount that you're going to deposit, there has to be this amount. It has to be 1,000 bob. It has to be 5k. So there's that. The initial amounts are usually different for each money market fund account, so you have to decide the one that you have. For example, with Zimela, you just need 100 bob to open an account to invest. For Saiton, it's 1,000 bob. For Jubilee, it's 5k. For ICA, it's 500. So each MMF has its own initial investment amount. Again, this is not a fee. This is just the initial amount that you can withdraw in case you want to withdraw all your money. So it's not like restricted. What are the advantages and disadvantages of investing in a money market fund account? One advantage is that the interest is earned daily. So any amount that you're going to be depositing after today is going to be accountable, and it's going to earn you interest. If you deposit today, if you make another deposit 2 days later, it's going to make a difference, because the interest you're going to be earning is going to be calculated on a daily basis. That is wonderful, because with other savings and investments, or for example, let's take a bank savings account or saving in a Sacco. It's usually calculated on a flat interest. Like, if you've deposited 100k right now, the interest is calculated at the end of the month. It's actually annual, so 12% per annum. So with 100k and 12% per annum, you surely know that you're going to be making 12% as your interest. But the thing about a money market fund is that the interest is earned daily, and then it compounds. The interest that you earned yesterday will be used to calculate the interest that you're earning today. And the interest that you earn today plus the money that is in your account today will be used to calculate the interest that is tomorrow. So those tiny bits of interest that are calculated daily are going to make a difference. They make a difference. The other advantage of a money market fund is that you can withdraw your money easily. And it's great for emergency for that reason. For instance, if you have 15k in your money market fund account, for most money market funds, if you withdraw to your M-Pesa number, it's instant. It's instant. Of course, there are restrictions. There's some which tell you can withdraw a maximum of 100k to M-Pesa. There's some which say a maximum of 10k to M-Pesa per day. So it actually depends, but it's instant. Like, you just click the button withdraw, and then the money is in your bank, is in your mobile number. That is if it's M-Pesa. And then the withdrawal to your bank account it takes days, because it has to be a transfer from them to your bank, but it takes like around 2 to 3 days. So if you make a request to withdraw money to your bank account today, you might get it tomorrow or the day after. Again, it depends, but the maximum is 3 days. So you can get it in less than a day, in 2 days, or in 3 days. You remember that initial investment that you started out with, that minimum amount of money, the first amount that you deposited, you can also withdraw that as well. You can actually withdraw all the money in your account such that your account is left 0, like literally. So it's not like these other accounts that restrict you in terms of the amount of money that you're going to withdraw, and then they tell you you have to leave a balance, that you can actually withdraw everything so that your account is 0. The other benefit is that they earn a higher interest rate. For example, for MMFs, the way I've shown you in that list of MMFs, you can see that the interest rate ranges between 10% or 9% to even as high as 16% to as high as 18%. Like, where can you get that? Where? A bank cannot give you that interest rate. It cannot. So they have a relatively higher interest rate than any other savings account. Any other savings account, like a bank savings account, a Sacco savings account, a mobile savings account. But there's some mobile savings accounts that have such high interest rate. But the fact that the interest is high, that is high. 10% to 16% is high. So you can't get that anywhere. You can't get that in a Sacco. You can't get that in a fixed certificate of deposits with a bank account. So it has a higher interest rate, not necessarily one that's going to make you rich or wealthy, but it's higher. So your money is fighting inflation, like it's combating inflation. The other benefit is that it's a low risk investment. It's low risk investment. This is because the Capital Markets Authority, this is the regulatory body that oversees money market funds in Kenya, has set some rules that this money can only be invested in short-term securities. In short, this money, the money that you're putting there, is restricted in terms of what that expert is going to invest in. They're not allowed to invest in real estate, such that if real estate goes down, you also go down. They're not allowed to make such investment. They're only allowed to make investment in short-term investments like treasury bills, cash deposits, that is with banks, okay? So for that reason, it's safe. Just think about it. If they were allowed to invest in real estate, buy land, or do whatever investments that they want, if those, those investments are risky, investing in real estate is risky, investing in businesses is risky. So if they were allowed to do that, the risk would transfer to you. But the fact that it's only restricted, that there's a body that is restricting this money and make sure that this money does not go to risky investments, makes it safe. What are the disadvantages of money market funds? They don't give loans. They don't give loans because you can withdraw your money anytime. You can withdraw your money anytime. Remember when I told you, like, you can just have an emergency right now and then you can access your money right now? For that reason, imagine an MMF gave you like 100,000 Kenyan shillings loan, and then you have the right to go withdraw the money. Not the money that you've invested, the money that is supposed to like buffer them and ensure that they get back their money. It's all depleted. So your account is zero. They've given you 100,000 Kenyan shillings, zero. The fact that you can withdraw your money anytime makes it risky for them to give you loans. The other disadvantage is the money is easily accessible. So if you're somebody who has not yet mastered the art of self-control, like you can touch your money anytime, then they're not good for you since you can't lock your money there. They are easily accessible. So yes, they are good for an emergency, but then for somebody who struggles with discipline, you save your money and then you want to touch it again. For somebody who is struggling with such a habit, then it's not good for you. Just the best option for you is to lock your money in a bank account or put it in an account that is going to penalize you. How do you deposit money to your money market fund account, and how do you withdraw money from your money market fund account? What happens is all money market funds or all money market fund accounts usually have a bank account. Like when you sign up for the first time to our specific money market fund account, for example, you decide to open an account with Sanlam, an MMF with Sanlam. They usually give you a deposit account where they'll tell you if you want to deposit money, deposit it to this bank account. Probably their bank is Stanchart or maybe their bank is Corp. So they're going to give you money. They're going to give you a bank account number that you're going to deposit money to. So for you to deposit money to the account, you can either do it via a bank. So you can do a PesaLink transfer from your bank account to that bank account that they have given you. And others have pay bills. So they can give you a pay bill by which you're going to be depositing your money to. And then they'll tell you the account number that you should use. In this case, it can be your membership account number. It depends. So you're going to deposit money from your bank account to their bank account, or from your M-Pesa account to their pay bill account. That's how you deposit. How do you withdraw money? See, now money is already on their side. And with a money market fund account, you have a digital platform that shows you your balance. So when you go there, when you check that balance, you'll be able to see, I have maybe 130,000 Kenyan shillings. How you withdraw is that there's usually an option, since most MMFs are digitized. They have a digitized platform. So they're going to have like a button that says withdraw. And then when you withdraw, you have an option to withdraw to your M-Pesa number or to withdraw to your bank account. Again, it's the same process. You can send money to your M-Pesa number or you can send money to your bank account. Others have, apart from having like a pay bill or like them asking you where to deposit your money to, There's some which have, what do we call it? Like this AI, they have a chat bot that you can chat with on WhatsApp. I think ICA has one where you just go to WhatsApp and then you say, I want to withdraw. You're chatting with the chat bot and then it asks you questions like, how much do you want to withdraw? Put your PIN, put the amount of money that you want to withdraw. You're simply chatting and then now the money is going to be deposited to your M-Pesa number. So I guess they're more digitized right now. So it's as simple as that. There are two types of money market funds here in Kenya. We have the Kenyan shillings money market fund account, and we also have the USD money market fund account, the dollar USD. So I would advise that if you are receiving money in Kenyan shillings, just invest in the one for Kenyan shillings. If you have money in USD, like literally you don't have to go to the bank to exchange your money, just invest in, or rather, if you have money in USD, invest in the dollar one. If you have money in Kes, invest in the Kes one. Because if you have money in Kenyan shillings and you want to invest in the dollar one, you might lose because of foreign exchange. You have to convert that money to USD and then invest in USD, and then when the money is in, and you make your money in USD and then it's deposited to your Kenyan shillings bank account, there's that exchange rate. So I would not advise you to invest in a USD money market fund account if you don't have any access to USD. You just have money in Kes, but you want to invest it in USD. The other thing is that you're going to notice that the interest rates for Kenyan shillings money market funds are 9% to even as high as 16 to 17%. But you're going to notice that for USD money market funds is around 3% to 7%. 7% is the highest one that I saw here in Kenya. So just take note of that. The interest rates are totally different, and the foreign exchange is going to make a difference. So you can see the list of money market funds here in Kenya, the ones in dollars. We have Etika, we have SC Shilling. You're going to notice that MMFs that are for banks or bank MMFs have more USD MMFs because banks have access to USD than any insurance company or than any wealth management fund. So that's something that you're going to notice, that most of these MMFs that are in USD are operated by banks because USD is at their disposal, but not all of them. In this list, I have shown you some of them which are not just money market funds, they are also fixed income funds. A fixed income fund is just like an MMF. The difference between money market fund account and the fixed income fund is in terms of where is the money being invested. Remember what I told you with MMFs, the money is being used by the experts to invest in treasury bills and cash deposits with banks. But now with fixed income funds, the money is specifically being used to invest in debt instruments like government bonds, the treasury bonds, and also corporate bonds. Corporate bonds are bonds that are given to businesses, huge businesses that are going to return the money. So with fixed income funds, specifically the money is on bonds. They are investing. We are not investing. They are investing, but on bonds. And then for money market funds is mainly on very short-term investments like treasury bills and cash deposits. But in terms of how you earn interest, it's the same. Interest is earned daily, compounded daily. So in that list, the one that I've shared, it has a list of fixed income funds and also money market funds that are operating in USD. So you can see that for Jubilee, or rather for CIC, you need a minimum of $1,000 to invest. And any additional investment that you're going to be topping up has to be 100. For Etika, you only need 100 USD to invest. And then any additional top up of investment has to be 50 USD. You can just go down and see the banks. We have Sanlam, Kuza, Saiton. So yeah, that's it for USD money market funds and USD fixed income funds. Let's do some calculations. You can actually find a money market fund calculator in my website. So just Google search Ivy Oyori money market fund calculator. You're going to come across a money market fund calculator that I have used to do these calculations. So it's automatic, it's quick, it's simple. So Ivy Oyori money market fund calculator. The other thing about that calculator is that it only calculates the interest. It hasn't taken away the withholding tax. It also hasn't taken away the management fee. So you'll have to take away that on your own for now until I adjust that calculator. The first calculation, if you're going to invest 1,000 bob, you're going to be saving 1,000 bob, 1,000 bob, 1,000 bob from January to December. You would have invested 12k, okay? But in an MMF that earns you 9.5%, you're going to make an interest of 541.54. So the total money, your total money that's going to be in your account is supposed to be 12,541.54. Out of the interest that you've earned, which is 541, take away 15%, which is the withholding tax, and then take away the 1%, assuming that the management fee is 1%, because it's also per annum. So that's how you come, that's how you calculate the interest, the actual interest that's going to be in your account. Assuming that you've also invested this 1,000 bob, 1,000 bob, 1,000 bob from January to December in an MMF that earns you 14.81%, you're going to make 858 shillings as your interest. You can see that the interest is not that much, but remember, this is a low risk investment with a low return. Calculation 2, let's assume that you're going to be investing, or you're going to be saving 5k, 5k, 5k in January, February to December. So 5k every single month to December. At the end of December, you would have saved up or invested 60,000 Kenyan shillings. But in an MMF that earns you 9.5% interest, the interest that you're going to be earning is 2,707.7. Okay, the 60k that you saved up, that you invested, plus the interest. What if you invested the same 5k, 5k, 5k every single month for the next 12 months, but in an MMF that earns you 14.81% interest? You'll make 42.94 shillings as the interest. Calculation 3, assuming that you have 500,000 Kenyan shillings right now, and you just want to put it in an MMF that earns 9.5% interest, and you're not going to touch that money, you're just going to leave that 500k for the whole year, for the whole 12 months, you're going to make 49,965 shillings. Assuming that you invested that 500k in an MMF that earns you 14.81%, it's going to earn you 80,032.27. So you can see the interest rate makes a difference. Let's do one other calculation. Assuming that you have 1 million, you deposit it in an MMF, you don't touch it, you leave it there for a whole year. In an MMF that earns you 9.5% interest, you're going to make 99,931, so almost 100k for a whole year. Assuming that 1 million is invested in an MMF that earns you 14.81% interest, you're not going to be making any deposits. You've just deposited 1 million, you've left it there. You're going to make around 160,000 at the end of the year. So do you think it's worth it? Do you think that with 1 million, you should get 160,000 Kenyan shillings? Because for some guys, they might say the amount is too little. Like they would prefer investing this 1 million in a real business. Because I mean, for a business, you can make even that 160k per month with 1 million. So it depends on how you see it. But remember, money market funds are low risk investments. So they have low returns. You can't compare them to a risk investment like shares, a risk investment like a business. Let's do one final calculation. This one is very important. We're going to assume that you have 60k right now and you deposit it in an MMF, you leave it there for the next 12 months. In the other assumption, we're going to compare it to you saving up 5k every single month for 12 months, such that the amount of money that you're going to invest for a whole year is going to be the same. So we're going to compare one lump sum investment, that is 60k that you're depositing right now, and you just saving up 5k, 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 so that it gets to that 60k. Which one will earn you more interest? We're going to use the same interest rate, which is 14.81. For the 60k that you're going to deposit at the beginning of the year, you're going to make 9,575. But if you just saved up 5K, 5K, 5K so that it's up to that 60K, you're going to make 4,294. So now you're able to see the time value of money. Money that is invested today, right now, is more valuable than money that is going to be invested tomorrow because of the compounding effect. So the 60K that you're going to invest today, you leave it there for a whole year, is going to bring in more money than you investing 5K, 5K, 5K to get to that 60K. Which is the best money market fund in Kenya? I don't have an answer to that because I haven't tried all money market fund accounts to say which one is the best. I actually did a video on TikTok where I was asking guys which is the best money market fund account, and different guys were giving different results. They had different experiences with the same money market fund. Some were recommending NCBA, some were recommending ICA Lion. So you can actually go check out that video, but I can recommend the one that I use. But I know other MMFs are good as well. But there's a criteria that you can use to know which is the best one. Number one, look at the interest rate. Look at one that gives you a relatively higher interest rate, not necessarily the highest one. Look for one that gives you a high interest rate, and I would recommend any that gives you 12% plus percent interest rate. That's a good money market fund account. But if it's less than 12%, why go to the one that earns you 10% instead of going for the one that earns you 14% or 12%? The other criteria is the customer service. Look for one that has an amazing customer service. And one way to know that is just try calling their lines and see if they're going to respond. I know for most of them, they'll respond. That means that in case you have any issue, they're going to sort you out. So that's another indicator of a good money market fund account. The best money market fund should have the least withdrawal charges. By that I mean any transfer to your bank account, assuming that you've already opened a money market fund account and you want to transfer funds from your money market fund account to your bank account, it should be free, because there's some money market funds that I know that are free to withdraw money to your bank account, and then they're going to charge you like 9 bob to 11 bob if you're going to withdraw around 10K to your M-Pesa. But if you're going to withdraw to your bank account, it's going to be a very, very minimal, like it should be zero. Like that's the bare minimum based on what some of the MMFs are doing, because some of them are charging you zero money to transfer money to your bank account. The withdrawal charges should be less. Like, even when you see a money market fund that charges you monthly, like a monthly maintenance fee, run away, because some of the MMFs that I know, they don't charge you any maintenance fee. They just charge you like a monthly maintenance fee of 5%, or I don't know, 50 bob per month. The three costs that are associated with MMFs are withholding tax, the maintenance fee, which should be like 1 to 3%, and then that's it. And the transaction charge, which should be less. So any additional charges, any additional costs, that's not the best MMF. The other thing that you should look out before you decide on a money market fund is the reputation. There's some which don't have a good reputation. So look for one that has a clean reputation, one that has, amazing reviews. Guys are like, choose this one. This one is just amazing. They answer my calls. They just generally have a good reputation. And the last criteria to look out for the best money market fund account is one that has an amazing digital platform. By that I mean, if they have an app, the application is working. Okay? No bugs, or just little bugs. When you try to operate their website, it's easy. Like for most of them, you have an account via their website. So you log into their website and then you have a portal. There's an account for you. So the process there should be seamless. You should be able to have transparency. Like, what are the transaction charges? Do they appear on my statement? Does the withholding tax appear on my statement? Does it say what interest rate was used for that month? Like, key things. The digital platform should promote transparency, and it should be easy to use. If it's their app, it's simple. It doesn't hang. It doesn't have bugs. It's just seamless. Money market funds versus Saccos. Which one should you go for? The downside of a money market fund is that it won't give you a loan. So if you think you're going to need a loan, you might need it most probably, have a Sacco account. Not necessarily like limit yourself to a Sacco, you can have both accounts. But the other benefit of a Sacco to a money market fund is that it allows you to buy shares. You can always earn dividends at the end of the year. So money market fund, you're just going to earn the interest, but with a Sacco, you can get a loan. With a Sacco, you can earn dividends. Yeah. But the downside of a Sacco to a money market fund is that a money market fund always has a higher interest rate on the deposits that you've done than a Sacco savings account. Sacco savings account, not a share capital account, not a transactional account, but in terms of savings in a money market fund earn you a higher interest than savings in a Sacco. One of the benefits of a money market fund to a Sacco is that you can withdraw all your money. In case you have, let's say, 30K saved up, you've earned interest, and then an emergency comes, you can withdraw all your money from your money market fund account. But guess what? You can't withdraw all your savings on a Sacco account. You have to have, there's usually a bare minimum that you can't touch. For some, it's 1,000 bob, like whatever amount that you're going to withdraw. For example, giving that analogy of a 30K, you have 30,000 Kenyan shillings in your Sacco account, but you're limited to withdrawing 2K. So you can't touch 2K. You can only withdraw 28K. There's that limitation with Saccos. But with MMFs, you can withdraw all your money, and then, forget about it and then deposit money again after 2 months. Finally, one of the benefits of a money market fund over Sacco is that money market funds are more digitized. Money market funds have digital platforms, they have apps, and like they actually work. But for most Saccos, they're still lagging behind in terms of technology. Who knows? Probably they're going to have like nice apps. Yeah, the Saccos have apps. It's just that they're not as seamless as the ones for money market funds accounts. So Saccos have a long way to go in terms of transparency, in terms of the charges that they're charging you when you're withdrawing your money, in terms of any withholding tax. Like I rarely see a withholding tax transaction on the transaction report of a Sacco, but you'll see that in a money market fund account. So I feel like Saccos have a long way to go. What's the difference between daily yield and annualized return or annualized yield? Daily yield is the return on your money market fund for that day that has been converted to a yearly return. Remember when I told you that in money market funds, the interest is earned daily. There's usually an interest rate for that day. Remember when I told you, like, if you're earning, let's say 12% per annum, and then 12% divided by 365 days, that's the daily yield. So exactly, the daily yield is the return that was used yesterday. Like whatever investment that you had, the interest that you earned, the return on that investment for the previous day, which is 0.000 something 12%. That is the daily yield. But now it's usually converted to annual, so times 365 days. That's why when you go to some websites for some of these money market funds, you're going to come across daily yield where it's like 16%. So 16% reflects yesterday's interest rate times 365 days or times 12 months. So that interest for yesterday, that's 0.000 whatever, has been converted to an annual yield, to an annual interest rate. The annual rate of return is the estimated interest rate that is based on the previous month, that is based on the previous years. It's not the exact one, it's just an estimate. For example, last year, the average interest rate for the whole year, that's now the annual rate of return. The annual rate of return is not used in calculating the current interest rate. So which one should you look out for? Look out for the daily yield. The daily yield is usually changing every single day. There's some websites which are really nice, the MMF websites, where when you go there, they show you the daily yield. So the daily yield is the one that is actually going to help you calculate the actual interest rate. But the annual rate of return is also important because it allows you to see how did this MMF perform last year? How did this MMF perform the previous year? How did the interest rate look like? So annual rate of return is more of historical interest rates can help you decide which MMF to invest in. For example, if you go check out the MMFs and the interest rates that they've been having, and you notice that the interest rate for this money market fund has always been around 14%. 14% in 2023, it was 14%. In 2024, it was 14%. So if you're able to look at the historical data, you can be able to tell that this one usually performs well. So it can inform your decision when choosing to invest in one. And then the daily yield is like the actual return that was used to calculate the interest that you earned yesterday. So they are both equally important. One is for predicting and just deciding which one to invest in, and then the other one is the actual performance of the money market fund.